All right, how's it going, everybody? My name is Antonio, and I am on the barbecue today on December 7th with Steve Cochrane, the president and CEO of Lithium Chile, a lithium exploration and development company with multiple lithium brine projects in Chile and one in Argentina. Who's not here with us today, though, is your financial advisor. This conversation is not going to include any recommendations to buy nor sell anything. Instead, it will be a general, impersonal, and a casual talk between two people on the internet. And if you haven't been burned yet, you're not supposed to blindly trust people on the internet. You cannot use this conversation as independent research either, because it's also going to include a lot of forward-looking statements about uncertain events that may or may not happen in the future. Please take the minute to pause the screen right now and read the full warning that is on there, because the mineral exploration, development, and mining industries are among the highest risk industries out there, and you need to be careful, as well as do your own research by visiting setterplus.ca, where you can find the company's official filings, analyze them, and of course, consult a professional investment advisor before taking your own decision in the end. That all said, Lithium Chile is listed on the TSX Ventures Exchange under the ticker symbol LITH, where an average of about 90,000 shares trade each day, and with a market cap of about 110 million Canadian dollars at the time of recording of this video, and about 205 million shares outstanding. This is a 54-cent stock with a 52-week high of about $1.15, excuse me, and a 52-week low of about 50 cents, give or take. So we're close to that right now. There are roughly 12 million warrants as well as 12 million stock options for a total fully diluted number at about 230 million shares. 45% of the company is owned by management, directors, and large shareholders. So out of that number of shares outstanding that I told you about earlier, the effective float is about 55%. At the end of Q3, Lithium Chile had almost $8 million in cash, about $23 million in marketable securities, as well as some prepaid expenses and other receivables, for a total amount of nearly $35 million in current assets. That is against about a $2 million in total liabilities. That's mostly made of account payables and a $1 million income tax with no long-term debt. As I said at the beginning, the company has multiple projects in Chile and one in Argentina, with a land holding totaling over 130,000 hectares. That's 1,300 square kilometers, which is about 15% larger than Hong Kong, or about as large as the city of LA. So this is to say that it's big. Off that foothold, about 85% is in Chile, and the rest is in Argentina. And in addition to the lithium properties in Chile, there is another 200 square kilometers of gold, silver, and copper exploration projects, which, as far as I understand it, aren't as active right now, but I'm hoping to maybe get an update on them too later on in the conversation. Zooming into the lithium projects, the most advanced one is in Argentina. It's in the Salta province, so it is in the lithium triangle. And the project is called the Arizaro project. It has an MRE on it, as well as a PEA. The MRE says that there's 1.7 million tons of lithium carbonate in the indicated category and 1.6 million tons in the inferred category, for a total resource of 3,323,000 tons of lithium carbonate equivalent. Now, based on this resource, the PEA was done this summer, and that came back showing the potential for a 25,000 ton per year operation, meant for producing your battery grade Li2CO3, which is just basically me trying to sound smart while I'm saying lithium carbonate, and they're hoping to do that over a period of 19 years. The study was done with the assumption that the average price of lithium would stay about above $21,000 per ton, that would be achievable. And that resulted in a $1.1 billion NPV8 after tax, that is, and also an after-tax internal rate of return of above 24%, as well as a payback period of 3.5 years, with an initial capex of $823 million, giving us a capex to NPV ratio of 0.74, so under 1, and an EV to NPV ratio at the time of recording of this video under 0.07, so we're very low. More specifically, at above $21,000 per ton of lithium, if built, this operation has the potential to result in $229 million of after-tax cash flow. Again, that for a period of 19 years. Since the PEA, the company has also just kept drilling the Arizaro project, most recently announcing that brines have been encountered in the areas of the projects that were previously undrilled. providing more drill targets basically to the north of the MRE, if I'm not mistaken, and potentially providing upside for this resource as well, which should become apparent in the pre-feasibility study, which the company is planning for April of next year, of 2024. But the focus right now, that's not the only project. As I mentioned, there's plenty of ground yet to be explored in Chile across no less than 12 projects. And most recently, there's been drilling at the Mali Verde project, where a total of 4 holes have been drilled, with the fourth one being recently completed or currently being drilled. I think recently completed would be more accurate. Completed. Good. Thanks, Steve. And so the first 3 having encountered brine, but no assay results have been released on it yet. And there are hopes of a resource on this project being released soon, basically, is what the last thing that I found. Geophysics are also currently underway at the Aguilar property, with drilling being expected there potentially this year, but definitely next year, as far as I understand. Again, something to talk about. But again, plenty of stuff to talk about already, which means that I'm going to have to be shutting up already and giving the CEO here a sizzling welcome to the barbecue. So, Steve, thank you for investing your time with me, sir.
Well, terrific, Antonio. I mean, you did a remarkable job. I mean, that covered everything off very accurately, very succinctly. So I appreciate that. But you do have the highlights of the story down pat. So now it'll really just, hopefully I can shed some color on just some of the things you brought to everyone's attention. So much appreciated.
Thank you. The pleasure is mutual, of course. What am I missing though? Let's start it there. Like, if you were pitching the story, what else would you have added?
Well, you know, the number one, I guess, the number one selling feature for us, and really any lithium story, is the global transition from internal combustion engines to electric vehicles. And that process is still unfolding. We've hit a bit of a bump in the road, no different than a lot of retail sales. Higher interest rates are going to impact, goods, particularly those higher cost goods. People are struggling these days with groceries, inflation, rent. I'm not sure what it's like in Europe, but certainly here in Canada, North America, there are a lot of challenges for the retail consumer. So it's not unexpected that the EV sales, along with every other retail good, would see some slowdown due to the interest rates. But that's temporary. I mean, this whole ground shift to electric transportation is going to continue, not only because individuals see the benefit of the smaller carbon footprint, but governments globally are pushing change. So I think the EV transition is here to stay, and as a result of that, lithium is still going to be a commodity much in demand. We have had a correction in commodity prices of about 75% in the last year. That's created some headwinds for the industry. Obviously, it's scared a few retail investors away, but at the same time, that's where opportunity lies. I'm sure you and your listeners know is that you want to buy products, you want to buy equity, you want to buy sectors when they're out of favor, not when everybody loves them. So I think the big part of the story is that electric the transition to EVs is still well entrenched, and lithium is going to be a primary beneficiary of that. And right now, it's opportune time to look at lithium stories because they're all trading, as you mentioned, closer to their 52-week lows than their 52-week highs. That's the first takeaway. The second takeaway, of course, is that in light of the correction in lithium prices, you've got to start looking at the low-cost lithium producers. Like any commodity, you want to be in that jurisdiction where the cost to produce a barrel of oil or a ton of lithium carbonate are the lowest. And there's no question South American brines are the cheapest form, the cheapest lithium carbonate anywhere in the world to produce a metric ton. At the other end of the range, of course, is the Australians, the spodumene producers, the hard rock producers. They're at the highest level. And so, again, there's been a lot of hard rock, spodumene stories that have come to market because lithium prices were so elevated. And it's great, as I say, when you have 50, 60,000 US per metric ton of lithium carbonate, you start getting back to that, 15, 18,000. The first casualties of that kind of a price correction are going to be your spodumene hard rock producers. So the second major takeaway, you want to be in the lowest cost sector of any commodity market. And there's no question that South American lithium brines have the lowest cost profile of any of the lithium carbonate producers. So we feel that's an advantage to us. And even though we're not producing yet, we've seen a lot of attention recently because the smart money sees that there's opportunities now because of the correction in most of the equity, most of the lithium stories. And of course, they're focused on the lowest cost producers in the sector. So, we're lucky that we've had a lot of interest recently reflected to us because of our position, because of the resource we've developed, and being a South American lithium brine producer gives us a certain advantage. So I think those are the kind of the two takeaways from a macro standpoint. That lithium demand is not going away, and if you look at all the forecasts, we have this sort of equilibrium, if you like, currently between sort of 24 and late 2025. But as you push into 26 and 27, if you believe most of the forecasts, there's this huge imbalance starting to develop between the supply and the demand. So, interesting enough, some of the parties we are talking to, and these are big players in the space, their concern really starts in 2027. They're looking for security of supply beginning in late 26, 2027, and extending out to 2030. That's when they start to see that real shortfall between supply and demand kind of kicking in. So interesting that these big companies, and they're not only sort of mining companies, but OEMs, companies in the automotive sector, are quite concerned that there's going to be this huge shortfall beginning in 2027, and that's their focus right now. So again, puts us in because if things unfold, and we'll have a much clearer idea after our pre-feasibility study, but right now our focus is to begin construction of our facility in late 2025 with about a year and a half construction phase and a commissioning of the plant in 2027. So, we're kind of looking at that target for our facility to come on stream right when we see demand and supply at its greatest divergence. So that's encouraging.
Right. And I think it's a good thing, that you have a positive outlook on the lithium price for maybe for the producers, for the companies who make their money off of lithium. But what I'm wondering here specifically for you is that, is there really juice left in this market? And I don't mean the story of electric vehicles and grid size batteries and whatnot. I'm talking about CapEx and M&A money, because that's sort of how shareholders of your company will eventually make their money, have their exiting liquidity. Do you still that there's still M&A money willing to flow toward the lithium market in South America now?
Absolutely. But it's not dumb. It's not dumb money anymore where, they would, throw money at any project, any Tom, Dick, and Harry. I think the correction in prices, the slowdown in the whole sector, has made these, buyers a lot smarter and cautious, and of course, a lot more shrewd when it comes to assessing, values and assessing projects. So, and that's only natural, right? When everybody's chasing, the same house, prices and buyers tend to, common sense tends to go out the window. But when there's an oversupply, and then people will be more cautious, more selective, and that's human nature. That's just natural. So, but again, in discussing opportunities with some of these bigger companies, they're looking down the road. They're not. There's not the urgency today to replace lithium for next month or even next year, but they are concerned about meeting demand, 2 years, 3 years, 4 years down the road. But they are more selective, and they can afford to be more selective. I think we're fortunate, and you mentioned, capex and investment. We're fortunate that we've got a good, strong bank balance, and certainly enough right now to carry us, forward for the next couple of years, until we see, things improve and prices pick up and interest pick up. We're fortunate. There are a lot of companies, as you're probably well aware of, that have come to market because lithium was the hot sector of the market over the last year, and we've seen lithium stories in the Northwest Territories, Northern Ontario, Northern Quebec, that probably don't make a lot of sense economically. Certainly don't make sense economically with prices hovering around 80 or 90,000 renminbi, that are going to find it very challenging to fund themselves going forward. So I think there'll be a little bit of house cleaning here. I think you're going to see some of the latecomers to the story, who haven't got strong balance sheets and have really, really early stage projects. There'll be casualties. It's always the case, right? When people tend to pile into top of cycles, and unfortunately, at bottoms of cycles, there's a shakeout. So ultimately, it'll be good for the industry. There'll be fewer players. There'll be more quality players, and we expect to be one of the beneficiaries of that sort of shakeout because of our well-defined asset, the developing resource, the capital that we have at our disposal, and as mentioned earlier, the fact that we happen to be domiciled in the lower cost range of lithium carbonate production.
Looking at the strategy that you have communicated over the last couple of years, though, would you have hoped that Lithium Chile, or at least the Argentinian project, was sold by now? Did you expect it to be sold by now?
We would have been sold by now, except the Canadian government, in their wisdom, ruled out the largest buyers in the space. In November of 2022, you recall, we had a significant Chinese investor, a significant producer of lithium carbonate, already established in Argentina, very familiar with our project and our people, who had taken 19.9% of the company, which was step one in the acquisition of the entire company. That was their game plan. And that was well underway, and that would have kind of come at the top, at a very opportune time in the market for everybody. until the Canadian government decided that for purely political reasons, that they didn't want Chinese investors. And the sad thing about it is, Canada touts itself as, a country where rule of law applies, as a country where, democratic country, free market, open market. And here's your Canadian government dictating who can and cannot invest in the Toronto Stock Exchange. And I think that just, sent a message to the rest of the world that Canada's not open for business. We can decide on a political whim who we want to invest in, who we don't. And it's not surprising that we're at the bottom of the G7 countries for direct foreign investment this year, and I think that it has something to do with the fact that foreign investors in particular, and the largest investors in the resource space, not just lithium but resources in general, are the Chinese. And you exclude, you take your biggest customer out of the market, what's going to happen? It has that ripple effect. So unfortunately, I feel very strongly that we would have seen an exit strategy. In fact, we were well down the road to an exit that had cold water thrown on it, if you like, because of the Canadian government's decision. So it still rankles, but nevertheless, it's just one of those challenges that you see day in and day out. And again, the strength of the asset, the interest in lithium, and the other important takeaway, if you look at Argentina as a whole, we are the last sort of pre-feasibility, post-PEA, pre-feasibility company with a developing resource left. All of our contemporaries, all of our peers, the last sort of company that would have been ahead of us, but not by much, was Alpha Lithium, and it was sold in September. So we're the last man standing. You have to go. The next layer is the juniors. The NOAAs, companies that are Argentina Lithium, outstanding. They had a nice investment. They're in the exploration stage. They're in the resource 43-101 resource development stage. Very early stage. No real defined resource yet. No 43-101 compliant resource, and really in their exploration phase. So there's huge vacuum. You've got your Gangfangs, you've got your Galaxies and POSCOs, and Lithium Americas that are all at the top. And then you have a number of juniors exploring, acquiring land. But you have one company in the middle, and that's Lithium Chile, that actually has a PEA defined resource moving to pre-feasibility. Interesting enough, we filed yesterday our environmental impact study for our production permit. That was submitted to the various ministries in Salty yesterday. So the permitting process to build that facility and permit it has underway. So again, I can't stress enough, people don't appreciate that, this is an advanced project. This is no longer just an exploration story. This is a maturing production story, and it makes us unique.
But where does that leave you? I mean, so the Canadian government, it's out of your hands, but there's a bunch of stuff that is well within your hands, or well within your possibilities to find another potential buyer. And who might that buyer be? And more specifically, what are you doing to find that buyer?
Well, obviously that's a very sensitive question, and I will for the time being dance around it, if you like. We have announced that PI Financial has been retained to look at the opportunities that are out there and really assist us, because we do have, as the some of the bull boards have reported, we have tire kickers, but we have a lot of them. And rather than me wasting my time and trying to separate the wheat from the chaff, PI has now taken over the whole process. And I can tell you, quite honestly, they've been doing a great job. We've had a number of follow-up, second and third follow-up calls. There are interested parties out there, and as I alluded to earlier, they come from the whole cross section of industry, the lithium industry, from the actual mining companies, the producing companies, all the way to the OEM manufacturers. So we are pursuing. We are still moving forward with our strategy. I mean, for us to stop and do nothing right now would be, a disaster. We've always had a game plan. We have a strategy. We have a business model. We're pursuing that. The pre-feasibility was the next step. And as you mentioned earlier on, mid-April to mid-May is the target to have that pre-feasibility study completed. That will continue to de-risk the story. We have 3 drilling rigs. We have 2 drilling right now. We have a rotary rig that has just completed production hole number 4. And we have a diamond drill hole that's just completed diamond drill hole number 8. Both of which, again, confirmed the aquifer, extended the aerial extent of the property. And we have a third production rig that's scheduled to arrive between the 10th and the 16th of December, and we'll begin drilling. All of this drill work is designed, obviously, to expand the resource. We think, because right now the 3.32 million tons that you announced earlier on that was in the PEA, it comes from about 55–60% of the property. The other 40% is still open, is still virgin territory, so to speak. And that's been the focus of this drill program. We think we can add another potentially million metric tons to that number. So we go from 3.3 to 4.3. But more importantly, we're going to move through this program, and as part of the pre-feasibility study, we're going to move the indicated category into measured, and the measured category into reserves. So that's another big part of this whole pre-feasibility study, is that, again, we add to the confidence that this resource is there, and whoever is looking at us has a high degree of confidence that the numbers, the economic numbers that they can apply from a valuation standpoint, are strong, because we have, increased the confidence, increase the reliability of those numbers. So that's a big part. Besides the pre-feasibility study, big part of the process right now is just building those resources, but building confidence in those resources that they exist.
I believe I believe you expected to come out with an updated resource before the end of the year, though. Is that still the expectation?
We will. And the resource report that we're anticipating will really, the first report, because unfortunately, the first hole that we have into the area, the previously unexplored area, actually wasn't tested. There was a clay band about 79 meters down that moisture that naturally occurs within the upper halite zone caused the clay to swell. And Zelendas, our well logging provider, and our sampling crew could not get equipment back down the hole. So we only have one hole that will add to those numbers. And then the second hole was the production test, the long-term pump test we did on production hole 2. So the next resource update will really be focused on moving indicated to measured. Again, increasing the confidence in those resources that exist, and that will be the next resource update that we'll see an increase, but a smaller increase than we hope, because we only have one hole into the new territory. But more importantly, again, defining those resources, increasing, de-risking them, increasing the confidence will be a big part of that next resource update. And I hope to have that out maybe within the next week.
Okay, good. Good. So it's going to be soon. But what about after that? So after that, you're going to try and come out with another updated resource, or are you going to go straight to PFS?
No, we'll have an updated resource. We'll complete. We've got production hole 4, which is completed. It was a great hole. Again, that will move a lot of the category, inferred to indicated and indicated to measured. But then we're moving into the unexplored, a large unexplored section of the of our property, which will add overall tonnage. That's the design. Get a diamond drill hole in, and potentially another production hole into the area in our claims that hasn't been touched. And for your listeners, and I'm sorry I don't have a map I could bring up, but the resources to date have been the kind of southwest of our claim block. And what we're going to do now is take the northeast and fill that in. And as I said, optimally, we can add, or ideally, we can add another 1 million metric tons to the overall number. But more importantly, the production wells we're going to be drilling will raise, just again, the confidence that those resources are there, and will move us again from an inferred sort of resource to hopefully a measured resource.
Right. And the PFS is still expected by April next year. Is that correct?
Yeah. So if I was a betting man, we would probably have an updated resource report late February, mid-March.
How much are those costing you, the updated resources?
Usually the report and everything runs about 20. Montgomery Engineering is the independent engineering firm we're using, and it runs us about 25,000 US.
Oh, okay, so that's not a whole lot. What about the PFS? How much money do you have to spend between now and having the PFS out?
We budgeted 8.5 million US for the PFS. And we're 3 months, about $1 million a month. So we're 3 months into a 8 months. So we've invested 3 million to date, and we'll have another 5 million to go. So we have more than enough cushion to complete that at this point in time, and still leave us with $23 million cash in the bank.
Well, you call it cash in the bank, but a large part of that is marketable securities, right? Is that something?
Yeah, but those marketable securities are 90-day T-bills, 90-day Government of Canada Treasury bills. So they mature every 90 days, and of course are cashable.
Right.
So you're right, marketable securities, but they're essentially GICs, Government of Canada GICs.
Right. And what do you think? What do you think really needs to happen for a potential coiner to get really interested here? And the way I see it, it's maybe one or two things. It's like either have the PFS out and show that you can make money even at these lithium prices, or do you think that the lithium prices have to be higher than what they are today for M&A to ramp up again?
Personally,
Sure.
I don't necessarily think we need to see prices ramp up. I think we need to see prices stop falling. I think we need stability, right? So once it's your commodity cycle, right? Gold, copper, nickel, oil's no different. You have the run up and supply comes on, then you have the drop, then you build the base, and that's where I think we need to see next that there's some confidence that the worst of the price correction is behind us. We're seeing stability. We're seeing, the outlook going forward becomes positive, because right now there's so much negativity just in the sector as a whole, right? I mean, you read more articles about EV inventories building and slumping EV sales, and the negativity, which is probably a good sign, because most negative articles come out at the bottom of markets, not at the top of markets. But there are some silver linings too. I read where Tesla, sorry, for the month of November, sold almost 87,000 EVs out of their Shanghai plant. For all of the negativity around China and its slowdown, they're still selling electric vehicles like there's no tomorrow. I think year to date sales up 49%, and in any other industry where you had 49% growth year over year, you'd be ecstatic. Now in our business, that's considered a slump. I think it's gonna. There's a couple of factors, not the least of which is stability in the lithium market. That people start looking beyond the doom and gloom and start to see some stability building. So I think that's step one. I think step two is we need to see some optimism come back into the market in general, and not just the technology sector, right? I think we need to see, that the interest rates have not only paused, but in the first quarter of 2024, we see, our first interest rate cuts. That'll take some pressure off the consumer. And I think that will drive EV sales even further. Once, rates come down and they feel better about their own financial situation, I think that will help. And there'll be again. I've been at the helm since 2017, so this is the second downturn I've seen. And as you well know, Antonio, we'll be in the midst of recovery, and prices will have risen 25%, and equity prices of lithium producers will have risen 25%. When people will realize, get back on the bandwagon. So, that first leg of a recovery tends to happen with people denying it's happening, right? So I think we're laying the groundwork right now for that recovery. Will it be second half of 2024? I hope. Could be as late as the first half of 25, possibly. But I think we're laying the foundation of that recovery as we speak. So and maybe it's me, but I'm optimistic, right?
But in conclusion, for your project specifically, that means that, you're certain you're gonna sell it. There's no situation in which you think you're gonna have to end up, you're gonna end up having to develop it basically yourself.
You know what? I think, as I am fond of telling people, it's not a question of if we'll sell it. It's just a question of when.
Okay. How would that work when it happens? Now that you're making it a when, not of an if question, how would that work with the current tax situation in Canada and so on and so forth?
Well, it'd be very easy if we have a non-Chinese buyer. It would be just an acquisition of the shares of Lithium Chile. We treat it as capital gains for the shareholders, at least in Canada. I'm not sure about our international shareholders. It would obviously boil down to the tax regulations and the country that they're domiciled in. There's the other option that we sell the asset, particularly the Argentinian asset. And that's sort of some of the discussions we've been having with a number of parties. Is just an outright sale. We've also looked at the potentiality of joint venturing with a major partner. Again, as a first step in an eventual acquisition of the entire company. We have a number of options on the table right now that if I had the capital, I would jump at in a heartbeat. As you may know, we did apply for all 5 blocks that REMSA had put up for bid in the northern section of the Salar de Rizarro. We're in amongst some tough competition, YPF, Gangfang, Litica. There were some big, deep-pocketed competitors that are in the bid process as well. One of the advantages we have, one of the categories that REMSA was looking at to evaluate all the offers is experience and activity and social community relationships in the area. Well, nobody's got the same experience we have. As you know, we kind of lit the fire, so to speak, that Arizaro is today when we announced our initial discovery back in February of 2022. So we have an outstanding track record of working and drilling and developing our asset, as well as we have first-class relationships with the community and our philosophy of shared value. We have members of the Tulare Grande Aboriginal community working for us and working with us. So we feel we rate quite highly on a number of the categories because of our experience in Arizaro. So that's one opportunity that we should hear about again before year end, where we think we have a good shot at least one of the prospects as well. But I've got a buy-sell agreement in place with a private Argentinian company that has a nice block on Arizaro as well. Relatively undeveloped, but because of closeology, you can assume, the potentiality for a resource similar to ours is there. Again, with the right partnership, with the right group, we would have an opportunity to essentially double our footprint. So, we're looking at other opportunities as well, but of course my focus and my preference would be either an outright sale of the company or the potentiality for a sale of the asset. And while nothing's firm, we do have, tire kickers. We do have expressions of interest, but we'll see where they go. And I think a change in overall sentiment would accelerate that process. But the weakness in prices, the uncertainty, the high interest rates, those are the factors I think keeping a lot of the players on the sidelines.
Why does your preference go to an outright sale of the company? Because and also when? Because the way I see it right now, at the beginning, as I mentioned, EV to NPV is very, very low for this asset. Granted, there is a capex overhang of almost $1 billion too there. But if you sell the company outright, are you getting value for the Chilean assets? And on top of that, you also have the copper, gold, silver assets as well. That, I mean, they're not that far up, but surely they're worth something. So do you think you're going to get proper value if you sell the company outright?
Well, unless I get a value that I perceive as fair, I won't sell it. So, the first step is to see what kind of an offer. And I'm fond of telling people it's like you put your house up for sale, and if the buyer wants to meet your price, he can have the fridge and the stove, right? I mean, you get the price you want, he can have whatever he wants. So I think the simple answer is, depending on value, depending on the offer, really everything's on the table. An outright sale of the company, the shares of the company, would be the best preferential or the best deal from a tax standpoint. That would be the preferential treatment from a tax standpoint. Individuals would have their capital gains, and that would be it. The other ones are a little bit more complicated because it involves, taxes on a foreign jurisdiction, and we've got tax advice that we could minimize it, but nevertheless, the simple sale of a company from a tax standpoint would be preferential. I believe our Chilean assets are grossly undervalued in our story right now. I mean, you touched on it, rightfully so, that if you look at the PA, the net present value, what our peer group has sold for, the cash we've got in the bank, our current market cap, current enterprise value, net of cash, is cheap. And so, I would I wouldn't accept anything near where we're trading right now. So a sale of the asset, we could strip out the Chilean assets and begin to advance those. I think we could create more value by splitting the company and getting value for each set of assets than what we're seeing now combined. So that's an option. Sure. And sorry to jump in there. One of the things is, as you well know, the whole regulatory environment is changing in Chile, and it's going to change for the better. There's been a lot of misinformation. There's been a lot of sort of incorrect assumptions that came from this announcement that Chile was creating a national lithium company. Chile nationalized lithium in 1980, 1981. Pinochet did. Uranium and lithium were owned by the state for the benefit of the people of Chile. It was already nationalized. What's happened over the last 43 years, other than SQM and Albemarle, which lease property from the government, there's been zero investment into, or very little. I mean, we put money in, Lithium Power International, America put money in, but compared to what we've seen in Argentina, Chile is the poor boy of South America. They got the strongest economy, they got the most stable political, but as far as their lithium development, lithium assets go, there's been really zero development. So they recognize that they're falling behind. They've gone from sort of 35, 50%, 35%, 23%. Next year it'll be 17% of the global lithium market. So they're still the second largest producer, though even that's at risk. So they recognize they need to do something. They need to encourage investment. They need to bring, the private sector in. So this announcement was really the acknowledgement by the Chilean government they need to open the door. They need to attract investment. So it's not surprising you have companies like Aramet that have announced recently an $800 million investment into Chile. BYD announced, I believe it was, they've announced an investment into a battery facility in Chile. Qinshan, the big Chinese nickel producer, announced they're building an anode plant in Antofagasta. They see this as an opportunity to get their toe in the door of the vast lithium resources, the vast untapped lithium resources that exist in Chile. So I think in 2024, Chile's going to surprise a lot of people when they finalize the fact that this proposal is not designed to take investment away. It's designed to open the door and create investment. They want to see the kind of investment Argentina is enjoying. They want to see the kind of project development Argentina is enjoying. And so I think 2024 for Chile could be a great year. And we've got a great portfolio. You know, we've got 12 projects. We've got probably one of the largest diversified lithium portfolios in Chile outside of the government and SQM. So we're in a very enviable position. And we know because we're getting conversations by various companies right now about our Chilean assets. So, you know, as part of our strategy, if the price is right, you know, or they want the Argentinian asset, we'd sell that for the right price. We would recap and move a number of the Chilean projects forward. If somebody wanted to come and do a deal with us in Chile, we would look at that as well. We've been kind of keeping things on the down low because, you know, the Chilean government has announced, and every day it changes. So I don't put a lot of stake in it, but, you know, they've announced there's going to be sort of three categories of salars and lithium development in Chile. One is going to be those salars that will be off the market for environmental reasons. There'll be, you know, they'll be set aside for flamingo reserves and national parks. The second set of salars that the government has identified will be so-called strategic, and those will be kept essentially for the government. Then there'll be the third category, which is open to anybody, private investment. So, you know, until we know for sure which categories these, you know, various salars are going to fall in, we've just been sort of kind of, you know, waiting for some clarification on which is going to be which before we really move more aggressively in Chile, which we think we'll know early in the new year. Having said that, that has not stopped some very, very major players, not just in the lithium space, but the mining space, approaching us about opportunities to work together in Chile. So you're right. Chile is an important part of our strategy that we get zero value for right now, but I think that will change as well.
How much money are you spending in Chile next year?
Right now, it's fluid. A lot of it's going to depend on just exactly what happens with this national lithium policy. One of the things we're focused on right now is, as you mentioned earlier on, doing a little bit more geophysical work and drill permitting work on Aguilera and Los Moros, two properties that we've got some priority on. But we're also advancing our community discussions on Coipasa and Helados, two of, I think, our more promising prospects in Chile. And depending how those discussions, you know, advance, that could change your plans, you know, dramatically.
Well, so I'm wondering, why even spend any money there if you're hoping for an outright sale of the company over the relatively short term, and you don't think you're getting value for the Chilean assets as they are right now? So why even advance them in the first place?
Well, because we've got a great team in Chile. They've accomplished a lot. I like to keep them busy to the extent I can. I think the value will be recognized for all the aforementioned reasons, this, you know, opening of the door. And I think it's important that we just don't sort of sit on our behind, so to speak, that, you know, we keep advancing these projects. You know, at the present time, on a cost-effective basis, obviously, until we have a much clearer picture of what's developing. But we don't have a big budget. I think right now with the work we're doing and our G&A and our staff is about 30,000 US a month.
Hmm. You mean for the Chilean assets or company wide?
Chilean.
Yeah, because I was kind of confused there. But okay, good point. Do you think you're going to get more value for those assets if they're more advanced, like if they're more drilled out, if you have drill targets and so on and so forth?
Well, we have drill targets and we have sampling and geophysics on virtually all of the projects. So a lot of them are ready to go, subject to community approval. As is everywhere these days, it's important to engage and work with your Indigenous communities. I don't care whether it's in Western Canada or Australia or South America. So that's an important part of our value proposition. As I mentioned earlier, we are fully engaged with our local Indigenous community in Arizaro, and we're working to that goal in Chile as well. So that's always going to be a work in progress. But we're also, to be quite frank, we're also in the midst of negotiating the potentiality of joint ventures in Chile as well. So ideally, I'd like to focus my energy and resources on Arizaro, and yet to bring in some reputable, big name partners that could carry forward a number of our Chilean projects as well. So that would do two things. That would establish a value for those Chilean assets, because as you mentioned, and I concur, we have zero value right now in our market cap for anything in Chile. You do a deal with a significant player in the space who's interested in Chile, that would all of a sudden, I think, wake some people up to the fact that there's more value in those Chilean assets that one is currently seeing. But it would also, as I mentioned, allow us to focus our resources in Argentina and yet still move forward a number of those projects, right? So that kind of, for me, is a win-win.
Sure. How would a JV on the Chilean assets impact a potential transaction, though, albeit for the whole company or for only for Arizaro?
Good question. It wouldn't have any impact on Arizaro. It might have an impact on the entire sale of the entire company. And before I transact anything, I would consult with our financial advisors and get their take, right? To say, do you think this will have an impact, will be detrimental, or worse yet, will it, kill a potential deal? And obviously, I would seek their advice, to their recommendations of what to do. But personally, we've got 12 projects in Chile. We've got 2 of them right now. We've got 2 of them joint ventured with a company. If we did, let's say, another 3, that's 5. We would still have 7 unattached. And really, in my mind, the 2 best projects are Coipasa and Jalados. And currently, I've kept those separate for that reason, right?
Okay. What about the precious metals? It's gold, silver, and copper, actually, potentially, I suppose. Assets. What's the latest there? I know you're not doing much on it, but what's the plan?
Well, it's interesting. I've said to a lot of people, I've been saying it since this past summer, I think the next commodity to catch fire is gold. I mean, I'm interested to hear your opinion, but gold has sort of built this huge base. It's kind of, laying in the weeds, so to speak, because, everybody's been focused on lithium and gold traditionally, currency of fear. Some people think currency uncertainty. Some people think Bitcoin has replaced that, but I said for a while now, I think gold could be the next real big commodity move. And as we've seen in the last couple of weeks, gold's hit an all-time high. So I value our gold assets. I think it's great to have that second commodity in the portfolio, even if we haven't. We're a lithium story, but having those assets is not a bad thing to have. We have probably on our most promising gold property, Carmona, and its sort of sister property, Las Guerrillas. We have picked up some additional claims with an operating mine there just recently. And we think that could be an attractive asset, both for ourselves to develop or to bring a partner in and again, jointly develop that. So while we don't always, talk about the gold assets, I believe, as you've heard, that gold is one of those sleepers that, we could wake up one day like we did when lithium went from $4,500 to $80,000, and having a really solid gold asset could be a real ace up our sleeve, so to speak.
Right. Well, I think we've gone through pretty much everything that you have going on in terms of properties. Just wondering, how does CXL and Gator, they're still large shareholders, what's their how do they look at all this? Are they supportive of the strategy? What do they want out of the company?
Well, again, because of confidentiality agreements, I can't elaborate too much. Although they are both great supporters, and I think CXL, if the opportunity arose and there was a change in the government's stance with respect to how they treat Chinese investors, CXL would be there tomorrow. I know that for a fact. But obviously, under the current environment and under the current order in council that forced them to sell their shares, they've really adopted a wait and see stance, right? Just see if at some point in time this hysteria over not allowing Chinese to invest in virtually everything. I mean, they say critical metals, but again, I happen to believe it's politically motivated, and should relations improve, which I think they need to, right? I mean, you don't take the second largest economy in the world and build fences around them. For political and strategic reasons, we should be trying to work with China, not isolate them. So I'm just hoping, as they are, that attitudes improve, that relationships improve, and I see them, as a great partner. They were a great partner, strategically, supportively. I see them, as in the future being part of us, right? So, but again, given the current, I guess I see relations between Canada and China, in general, and Canada and CXL in particular. We have to have a wait and see attitude.
Could you just couldn't you just move the company just to South America? Because the Chinese are investing a bunch of money in South America. You look at the map of the Belt and Road Initiative that's invested over $10 billion was it in at the end of June. So a bunch of money. big part of that is it just in South America. Could you not move the company?
I prefer not to discuss that at this
Okay.
present time. We're looking at all options. We have been, and as you know, there are a number of options. But again, keeping in mind tax consequences and costs, it's a lot more complicated than just saying, well, we're going to move, right? So at this present time, we're open to, all options. We just have to wait and see. For me, the ideal situation is that, we come to our senses and embrace our relationship with China and see that, going forward, it's a beneficial partnership. It should be a mutually beneficial partnership for our country and theirs, and that we build bridges and not walls, and that common sense, comes into play. That, for me, that would be the ideal situation. And again, as they say, who knows what's going to happen in the next 6 to 12 months. So fingers crossed.
The way why I raised the question of the bigger shareholders there and what they're doing is because I'm interested to know how patient they are, really, because of course we don't want to have an uncontrollable supply of shares into an already soft market.
Yeah, you know what? I guess we all worry about that, but that's not a decision that I can influence directly. It's a decision I can influence indirectly by continuing to prove that this is a world-class resource, that Erizaro is a world-class resource. It's going to be a world-class mine, that the project is moving forward. I just came back, as I mentioned to you, from Argentina on the weekend, and I had an individual on this trip, a banker, who had been there in May of 2022, about a year and 3 months ago. And what he saw on this trip, he couldn't believe, because when we were there in April, May of last year, we stood on that one well, that initial discovery well, Argentum 01, and that was it. And we had a picture of the team around that one well. Now we have 12, soon to be 13 wells. We have a permanent camp. We have a PEA. We have infrastructure. We have roads. We have water wells. I mean, it's amazing what we've accomplished in 1 year, and our price is the same place it was this time, in 2022. So unfortunately, and I'm sure Antonio, markets will be markets will be markets. You've got headwinds, you've got tailwinds, you've got euphoria, you got hysteria. We can't control that. The only thing I can control and I have any influence over is what's going on the ground. And what I just told you is a classic example. You have to step back sometimes and say, God, what the team in Argentina has accomplished in the last year, going from one production well in February of 2022 to PEA in August of 2023 is simply amazing. It's miraculous when you see what they've accomplished on a budget, on time and on a budget. I think we had $4 million budgeted for the PEA, and we came in at 2.5 or 2.8. The PEA involved 5,000 hours of engineering from Masenko Engineering. The 3 fees is 20,000 hours of engineering alone, and we budgeted 8.5 million. I'm just as hopeful that we'll come in on time and under budget on that. But it's simply unbelievable what we've accomplished in such a short period of time. So I hope that I know CXL appreciates it because they've got an office and people in Argentina. They're quite regularly looking at what we're doing there. Gator same way. Notwithstanding the fact that the markets are brutal, abysmal. You just look at what all's been accomplished, and hopefully that offsets some of that concern. If we're out of cash and we hadn't done anything for a year, yeah, I'd be worried. But when we're delivering, consistently, regularly, great results. Somebody told me this summer I was in Vancouver, they've never seen a company that's had more good news and gone down every time in their life. So, I mean, we're getting the job done on the ground. And I just hope all our shareholders appreciate that.
Well, so there's the concern for potential uncontrollable buying, and the way you, as you said, what you can do to offset that concern. One thing that you could do to offset that concern is controllable buying on the other side. So insider buying. Is that something that's within your strategy for 2024 to support the share price?
Unfortunately, if I could, I would. I'm blacked out.
Right. You told me a couple of times that you
Yeah.
have information that you can disclose. So
no, and we've been advised, because I've said the same thing to our legal counsel, and they said, Steve, it's just no way. Because unfortunately, I don't know whether something's going to happen the next hour, or the next day, or the next week, or the next month, or the next year. I mean, there's so much. There's so many moving parts, and there's a lot of discussions. And the worst thing that could happen is that you say, okay, enough's enough. It's too much value here. I've got a good place. And then something breaks, and everybody's going to go, oh, look at this. You had a prior knowledge. And all I have prior knowledge of is discussions, not, anything material, but that could change. And then you just don't want to get caught up in that. So all our entire office, insiders, directors, everybody's blacked out. So it's not that we don't want to. It's just we can't. But you're right. I mean, I've been on the road the last, as mentioned, the last 5 weeks. I probably attended, I have attended 1, 2, 3, 4 conferences. I've probably had 200 one-on-one meetings. I've had 8 to 12 group presentations. And the comment that comes back every time is, we love your story. We think you guys are a great opportunity. We're concerned about the market. This is smart money. And a couple of guys, the institutional guys I met in London, they said that, we aim for a 5 to 6% annual return. And we can get that in bonds. We can get that in, right now, without any risk, we can generate those kind of returns. And that's the problem. I mean, right now, the risk appetite has vaporized along with interest rates. So, that's the battle we're fighting right now, is that, until we see interest rates come down, and that's why I alluded to earlier, that could change that appetite. But right now, no matter how much people like you and see value, there's just so many low risk investments that are generating the kind of returns that were only dreamt of 2 years ago. That it's a very competitive landscape.
So it basically sounds to me like what solves this story is getting a deal done as soon as possible, but also doing work in the meanwhile. Like, it doesn't sound to me that that you can get yourself out of this share price performance through marketing. Although, as you said, and you and I met in London on one of those conferences, so I know that you're out there and you're telling the story. But yeah, I mean, is that it? I mean, do you think there's something else that you could do in terms of marketing or in terms of anything else? Or is this like mostly at the mercy of getting a deal?
Well, I think getting a deal is the short-term solution. Obviously, that would solve a lot of issues, particularly with the market, right? I said, guys keep saying, why don't you put it on press? I go, every time you put it on press, the stock goes down. The only press that's going to really create any value for anybody is when I can say we've got an offer, it's XYZ offer, right? Then the market should respond favorably. So we're working on that. That is something that, is going on every day. Before we had our call, I signed another NDA. We have a data room set up. We've got full-time financial advisor. So that is obviously a priority. But the second priority is not just to sort of sit there waiting for somebody to come to us. As you mentioned, our strategy has always been to, develop this resource, develop this asset, which we're doing. And for me, it's kind of a balancing act. Can we create more value than the headwinds of, a bear market in the market, a bear market in lithium prices, a bear market in EVs? Can we create more value on the ground to offset the sort of negativity of all those, forces currently, aligned against us? And that is rates. That's, the overall slump in markets, the specific slump in the lithium EV market. So, I've got to keep moving forward. I got to keep moving the project forward, because one day those values are going to be recognized. They were the last time around. We came from 10 cents to $1.15, as you pointed out. I think, and we've come from $1.15 back to 50, but we haven't gone back to 10 cents. So we have created value, right? I think that, between this cycle and the last cycle, we went back to a dime. This time, if we can hold our own, at 50 cents, then I think we've accomplished something, right? So, and that's been done through what we've done on the ground. So, I have to do both. I do every day work on the potentiality for a transaction, but at the same time, we're working on the ground in Argentina as well. So hopefully it's the best of both worlds.
Well, Steve, we've gone through a whole lot. I'm looking at the presentation and seeing if I'm missing something here. Bode, is there something that you came here hoping to talk about, but I'm failing to bring up?
No, we've covered a lot of ground. You've indulged my own personal sort of philosophies as well, which I really appreciate. No, I think we've got an awful lot of irons in the fire. I wish I could be more specific. I wish I could, talk in detail. The only advice I would say is stay tuned and see what rabbits we may pull out of the hat over the coming months, right? But I think there's some really interesting stuff going on that I hope will come to fruition.
Well, Steve, I appreciate you telling the story, and I hope we'll be able to do this again soon in the future and talk about some of those developments. So thank you so much for investing your time in me.
Well, thanks for taking the time. They're great questions, and it's great to have this sounding board, because it's really nice to try and put everything in perspective. It's been a challenging year, but we're still here.